So now I would like to talk about the effects and how it relates in the business cycle when income increases. So New York recently wanted an increase in their income. So instead of it being the minimum wage being $8, they want it up to 10, 15, I don't know. Anyway, so they raised their minimum wage. And I'm going to use New York as an example because it just makes more sense. Anyways, so whenever there's an increase in income, it automatically affects the consumption and investments. It could also affect the government if we start talking about taxes and what they begin to get at the end of the year and how much they receive in the end of it. Like when you have to go take your taxes or just paying like taxes right then and there at the store. All of that fun stuff. So New York raises their minimum wage. This increases income, which allows more people to spend more money on things, which directly affects consumption. Since they have more money to spend, more money to blow, they're like, hey, you know what? I want to buy, I don't know, this marker. They want more markers. So the Sharpie company starts spending more money on markers. They're like, you know what? Everyone wants markers now because they're so cool. We just have to create more markers. So then the business starts to say, hey, let's make more. So they start to invest money on resources and labor, which then directly influence the whole consumption, seeing as the household has even more money. It could affect government revenue if we begin to talk about taxes and what they receive at the end of the year and how it increases and how the government starts subsidizing things, especially labor and resources and all of that fun stuff. We see the change in the chart. Wow, that was a crappy chart. Anyways, we see the change in the chart since the aggregate demand curve shifts to the right. And so you see like it has a bit more inflation, but there is much more space.